Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Massar and Tim Stenovec on Bloomberg Radio.
Massar along with Romaine, Bostick here at Milken in Beverly Hills. Right now we've got David Rubenstein, Carlyle Group co-chairman, co-founder and host, of course, of the David Rubenstein Show, peer-to-peer conversations, appearing on Bloomberg. He's also principal owner of Major League Baseball's Baltimore Orioles. We always like to point that out.
It is so loud here.
It is loud.
And, we've been doing this all day. You come up here, right, and you're the only person we want to talk to, because in all seriousness though, David, we want to know what you think about some of the comments that we heard from Scott Bessent earlier today and his message to investors. Did that message resonate with you?
I think he did a very good job.
Yeah.
Obviously, the business people have been concerned about tariffs and not knowing where it's going to go. He came out and basically more or less repeated what he had said in the Wall Street Journal article today, which is there are three elements of the economic program. One is tariffs, the other is tax cuts, the other is deregulation. And I think he did a really good job of explaining why all three mesh together. Now, they have to get these things done, but if they can get the tax cut through, they can get the deregulation they want through, I think the business community will be reasonably happy. The tariffs is still a bit of a problem for the business community because they don't fully understand what the end game is. But I think Scott Bessent did a pretty good job.
Obviously, Carlyle has a huge presence in Washington. You know how that city works. The business-friendly administration that was promised during the campaign, is that still intact, or is that still going to show up?
I think the business community, by and large, is willing to give the Trump administration the benefit of the doubt, because the business community, to the extent that business people tend to be CEOs and I'd say investors and Republican perhaps, they want to have this administration succeed. They're a little bit confused about the tariffs, but I think they're willing to give the benefit of the doubt to the administration. Now, the tax cut bill is what people are focused on, and I will interview on a Bloomberg show soon the chairman of the House Ways and Means Committee, Jason Smith. And they are getting ready to have hearings and mark up that bill. And whether that bill goes in the direction the business committee wants, we don't know. But I think tax cuts are what the administration thinks is going to happen. The question is, can you really afford it?
Well, that's what I want to ask you, David. Can we afford, with the deficit, the $37 trillion deficit?
You can afford it if you... depends on how you massage the numbers. There's a $4 trillion number that they haven't figured out how to deal with yet, which is to say they want to make certain tax cuts permanent but not count the $4 trillion as part of the deficit. That's an unusual thing to do. Maybe they can get away with it. I don't know.
Are the people you're talking to, though, whether it's on your shows on Bloomberg, whether it's privately with regards to your business, are they still optimistic?
Business people, by and large, tend to be optimistic by nature. They generally think things are going to be better than things are not going to be good. So I think people are hoping that the administration can get the tax cut bill through, the deregulation through. They hope that somebody can come along and get some of these tariffs agreements agreed to. I think Scott Bessent is a really smart guy. I think he's done a pretty good job so far representing the administration. I think he's their best voice on the economy by far.
Has anyone approached you about being involved in this administration, whether in a formal or informal role?
I think that's not likely. This administration fired me from being chairman of the Kennedy Center, so I think probably I'm not the first choice. But no, I think my days of being in government are probably behind us.
All right, David, really appreciate you stopping by.
Pleasure. Thanks a lot.
Here. David Rubenstein.
You're a good sport.
Thank you.
Thank you so much.
Carlyle Group co-founder and co-chairman, also, of course, the host of the show Peer to Peer.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
All right, a great conversation right now live on the Milken stage, where we focus on government policy and, more importantly, budgets. We talk about tax collection here in the USA. Those projections are down. Refunds, they're up, and that's a formula that could dampen government revenue and portend an earlier deadline for Congress to raise the debt ceiling or risk of federal payments default. Phillip Swagel is the director of the U.S. Congressional Budget Office, and he joins us now here on the Milken stage. Phillip, great to have you here.
Yeah, thanks so much.
Let's get right to it. Everyone's talking about this so-called X date. I know it's a squishy date, but when people look at tax receipts, they look at the current situation in Congress right now. Is that date going to move up?
We still have it as late in the summer, into August, into September. Of course, it's possible that it can come forward depending on the continued revenue, especially in June. But for now, we're comfortable with our later date that Congress has time to act on it.
The revenue you're seeing coming in, at least in the most recent month, you're encouraged by that?
It was tracking reasonably well with our expectation, and this is the projections that we made back in January and February, that the revenues are still in line with that.
One thing I want to ask you in terms of real deficit reduction, because one of the things, I just did a global real estate panel, and the thing that they are most concerned about seemed to be the growing U.S. deficit. What real constructive work are we doing to really reduce the deficit, and what kind of pain might it impose on U.S. citizens?
Yeah, I've seen the Treasury Secretary talk about that. He was here at the Milken Conference this morning talking about it. He is writing in the Wall Street Journal about it. And so I know he's focused on it. I know the administration is focused on it. And it's important, it's necessary. It doesn't have to be done immediately, but that, since this should be reassuring to the American people.
Why do you say it doesn't have to be done immediately? Many would have said 10 years ago, 15 years ago, we would have had this conversation and talked about kicking the can down the road, and here we are again. Why is it not an immediate problem? You're
exactly right, that in the past, there's been an urgency and then the lack of follow-through, the lack of action. And that's part of my message, is that we do as a country have time because the rest of the world still sees us as a country that's stable, that's secure, that's growing. There's lots of volatility in the U.S. and the policy environment now, and that's a negative. We still have the trust of global investors, and that's what gives us time.
How confident, though, are you right now in your economic projections? The Treasury Secretary was here earlier today. He specifically called out the CBO's GDP projections of 2%-ish or so. He's saying, in his view, that number should be closer to 3%. What's the gap? Why does that gap exist?
Okay, the gap is understandable because what CBO is doing is projecting the economy under current law. And what the Treasury Secretary is doing is completely appropriate. He's saying, with the president's agenda, he says, we, the administration, have a pro-growth agenda. He thinks that will be successful, and of course, all Americans hope it will be, and that will boost economic growth. And if it does, well, then that will be good for everyone. We're just looking at different things. So we're looking at what was the economic trajectory before the president's agenda.
There's a balance, though, as well. So we don't quite know which policies will become law or become real. I know that's going to take some time. But we do know the contours of this administration. A crackdown on immigration, which immigration, of course, to a certain extent has been a net positive, at least on aggregate GDP growth in this country. There's also a lot of issues when it comes to the IRA, which the Trump administration is trying to scale back. When do you factor those impacts in and the potential drag on growth?
You're putting your finger exactly in the important question, is that all of the changes happening, both the executive actions and then the legislation being considered by the Congress, how will those impact the economy? And so the executive action you mentioned on immigration, that affects the labor force, that affects the economy, it affects the federal budget. We are tracking that. It's still a little bit too soon to know what is the long-term impact of that. Is the decline in immigration temporary, or is it a long-term factor? And that's the kind of thing we are tracking. Our next update will be late spring, early summer, and we will build in the IRA, all the other changes into that next update.
Many economists, though, in terms of immigration, the importance in terms of feeding the labor market, providing a younger population, they point to Japan, they point to places like South Korea where folks are not having babies anymore, and even in America in terms of the small families that people are having. So I understand what you're you're saying, but a lot of economists have done the research for years about the importance of immigration in terms of the health of economic growth for a nation.
It's what makes immigration a difficult issue is that it's both an economic issue, and you pointed to the key economic factors, but it's a social issue, it's a political issue. People worry about crime and safety and local communities, and it builds together all those things. And then there's high-skilled immigration and low-skilled immigration, and those are connected as well in the policy space. So that's what makes it a difficult thing, is because it brings together so many cross-currents in our society.
I am curious when you guys think about the outlook. We're in earnings season and we've been reporting on it, and you do have companies come out with two scenarios because they see it as one potentially where we are no growth or in a recession, and so it doesn't look so good. We have another where things look pretty normal and we're back to American exceptionalism. Tell us about the scenarios that you are planning for, because that's very different in terms of the U.S. government, what the fiscal picture looks like.
No, you're right. And we at CBO have the same dilemma as the companies to try to figure out which trajectory are we going on. And of course, there's a spectrum between them. We suspect the volatility of the last month will lead to slower business investment, reduce capital inflows, reduce foreign investment in the U.S. That will tend to have a negative effect on growth. On the other hand, if there are trade deals, if there's changes in regulation that are pro-growth, that will go in the other direction. And that's what we're looking at, is to try to figure out the balance between the sort of the downward pressures of the volatility especially, and the upward of the president's agenda.
Is there a balance, or are you leaning one way or the other based on what we've seen so far?
It's just too soon, because there's a sense in which we have all the volatility, we have all the negative parts, and now we're waiting on the positive. And that, I'll just today, CBO, we posted our first cost estimate for the reconciliation bill of the House Armed Services Committee. So there's lots more to come as the different committees in the House do their work, and we will analyze it. But it just gives you an indication there's a lot more coming. There's a lot of legislative activity, and that's the part that's still to be written.
CBO, independent, nonpartisan. Is there political pressure on you to make sure that numbers look a certain way or point in a certain direction?
So I have benefited from 50 years of CBO being independent, being nonpartisan, my predecessors doing a good job. And that's what members expect from us, from me. They expect honest analysis, whatever the numbers are. They just want to hear it. And I don't want to disappoint people, but if the numbers are not what they hope for, it's just another day, and that's just, we're doing our job.
So that means no pressure?
The pressure is really internal. Okay. We're trying to do a good job. We want to be as complete as we can, as comprehensive as we can, as transparent as we can, and that's really the pressure.
All right. Well, I really appreciate. There's a lot going on your end, so we really appreciate you finding some time for Romaine and me in Bloomberg.
Pleasure.
Phillip Swagel, he's the U.S. Congressional Budget Office Director, joining us here at Milken.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
As we get the intersection of the economy, of what's going on in Washington, and of course what's going on in financial markets. Financial markets that in many ways have now blended together. A lot of people have mused that private markets to a certain extent have actually become the new public markets. And while that might be overstating it just a bit, the Venn diagram definitely shows a degree of increasing overlap. So who better to kick things off today than with Man Group, the world's largest listed hedge fund company with about $170 billion in assets spanning both public and private markets, a mix of long-only and alternative approaches across all major asset classes. And now that I've pumped you up, pleased to say that the person at the center of all that joined us right now, Robyn, who helps lead the Man Group. Great to see you here on the Milken stage in LA.
Thanks for having me.
Volatility in this market. If you're a broker dealer, probably good for you. If you're a hedge fund manager, not so much.
Well, volatility is a place where we need to lean in to do more. we are in volatile markets. We're not going back to a benign market environment. And so in that space, we have to be prepared to create diversified content and capability that's able to navigate these markets to provide outsized returns or alpha returns to our investors.
How do you do that, though? Because when you look at the strategies that Man Group has, a lot of systematic strategies, a lot of trend-following strategies that we've seen over the last few weeks and months does not necessarily perform optimally when there is so much misdirection going on in the market.
Totally, and they're not supposed to. I think that's the thing that we need to be mindful of. In a diversified portfolio, you're going to have assets and capabilities and strategies that do perform, and we've seen that in credit, both public and private. We've seen it in great active equity management. We've seen it in multi-strat. But you don't see it in trend because that whipsawing, whiplashing behavior doesn't work for it. But that's why when clients are talking to us about how do they position their portfolios, they're looking at the things that will operate in markets as we're seeing today. And they're also thinking about defensive alpha. And what we do know, and what we've had history around, is that when you have decades of experience in momentum and trend strategies, they operate well when this volatility slows down, and then you can find the trends again.
Do you expect that volatility to slow down anytime soon?
I think that volatility is going to be here for some time. It's whether the volatility is accompanied by whiplash behavior. And that's what the markets are looking for. We're looking for that consistency, something that is predictable and capable of being predicted. But there's no doubt that the opportunity set across markets, across jurisdictions, are really interesting right now. 100 days ago, you might not have thought about Europe as a growth opportunity. Today we sit here talking about that. We're looking at Asia with a very different set of lenses. We're seeing real opportunities for active and alternative investments. And it's about staying calm through this time as well. But volatility, will it be here for some time? I think so. Dispersion? Yep, I think so. But whiplash? Let's hope not forever.
I don't know if you got a chance to hear what Scott Bessent had to say a little bit earlier at one of the Milken panels here. But there was a really interesting moment in that where he really turned to the audience and looked straight at them and said, we're trying to make everything more appealing for you, meaning for the investors out there that are in this room. Do you find any comfort in hearing those words out of Scott Bessent?
Absolutely. You know, we want this biggest, deepest capital market to function really, really well. We just also put to work by our clients to go and seek out alpha wherever that may be, that outperformance across all markets. That's why we trade 800 plus markets in the world. Mm-hmm. That's our job to do that. And we do that for real individuals who have saved all their lives, who have put into their pension pots, be it their 401ks or their IRAs or the equivalents elsewhere in the world. But yes, I think it's a tremendous statement that we have Scott Bessent talking to us about actually being supportive of markets. I think that's a great thing.
Is that too little too late? This is a room full of people from around the world. And you know there's been a reallocation of capital, or at least a rethink of whether to reallocate capital away from the U.S. to Europe, for example, or even to other parts of the world.
Too little, too late? I don't think so. I think we all look to the quality of the US as an investable space. And again, it's the opportunity set that's out there. Is it a bad thing that there's competition? Is this a bad thing that there's growth in Europe or an opportunity set in Asia that's opening up? I don't think so. In the same way as I don't think it's a bad thing that we're seeing the opportunities in private credit open up. Mm-hmm. So I think there's plenty for us to keep our very detailed focus on. But no, I don't think it's too little too late.
How do you keep your team, the folks who work under you, not just motivated, but to get them to understand what the long-term goal is in an environment where we are so focused on these minute-by-minute, short-term disruptions?
It's a great question. I think the reality is you have to have confidence in the strategies you're running. And you have to know that those strategies are performing the way they should do in the market environments you're in. So you keep that focus. At Man Group, if we have strategies that aren't working in a period of time, I don't have to go onto the floor and make people feel more unhappy. They're doing that themselves. So for what we do, it's about being sure that we're doing the best we can do We continue to be at the cutting edge, entrepreneurially, of content and product and capability, that we deliver that to our clients, that we deliver more than just funds or products even to clients, that we're delivering the decades of experience we have in AI or technology, or we're delivering the nearly 20 years of experience we have in our partnership with the Milken Institute at Oxford University. It's about keeping people focused on the day job. It's about staying calm.
You mentioned AI, and of course, Man Group was probably one of the early adopters, at least in the finance space, of AI. And I think we spoke about this at Bloomberg Invest a few months ago. Does that become more critical in times like this, having those types of capabilities, or is it potentially a liability? Because you're effectively talking about, I don't know, something that's, I don't want to say it's predetermined, but certainly there's a roadmap that's put out when it comes to these models.
Listen, I think AI is a tool. We talked about it before. It is a great capability. When I think about generative AI, when I think about AI agents, it's about deploying those. It means we can be better, faster, smarter. It doesn't replace the human being, and it doesn't mean that you need to ignore the risks that are incumbent in these capabilities too. But I think that tech is part and parcel of what the future looks like. Undoubtedly. AI part of that? Undoubtedly. You don't have to look very far in this conference or the meetings we had with Elon Musk yesterday to see just the power and the capability of these future technologies.
And you think the investment in that writ large, not just at Man Group, investment in that AI tech, that hasn't been disrupted at all? There hasn't been a rethink on that longer term investment opportunity?
Not for us. We continue to think that AI, and we continue to think that this is both being consumed within Man Group and within the work that we do, but the broader reach out into other industries and other spaces is going to be, I think, transformational.
You've been on the job for a while now, so you're not new, you're more of a veteran now. And you're a veteran at a time where this has to be one of the more challenging times to be a corporate leader, certainly of a financial company. And I am curious as to what you want to do to grow Man Group, knowing that the world order that you came into, if not over, is certainly being reshaped.
I think listen, it's a privilege to sit in the seats we do. And I've been talking to clients non-stop, really, for the last 100 days or so. And that privilege is something we shouldn't forget. Mm-hmm. You get a front row seat into what's happening in the world doing the jobs we do. And so my job, how has it changed in the last 100 days? It hasn't really. It's still about doing the right thing by clients. It's still about sticking to the strategy we have. It's still about creating diversified, orthogonal, uncorrelated content so our clients can benefit and can return value to their underlying savers and pensioners.
All right, Robyn, well, we'll let you get to it. I know you got a busy couple of days here at Milken. It's Robyn Grew, the CEO of the Man Group.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let me get back to our special coverage of Milken, and pleased to say that the chair of the U.S. Federal Communications Commission, Brendan Carr, joins us right now. Brendan, great to see you here. I know you've been making the rounds. You had a panel here. Everyone right now wants to know what the FCC's role is right now in the broader policies, particularly when it comes to infrastructure being rolled out by the White House.
Yeah, thanks so much. President Trump has been very clear. He wants to unleash America's private sector to build again. If you look back the last 4 years, so many infrastructure projects got bogged down in reams of red tape. We saw it with his $42 billion internet infrastructure plan that went nowhere. And so he directed us to deregulate. In fact, we've engaged in the most massive deregulation effort at the FCC that we've ever done. It's underway right now. We've closed and looking to close 2,000 dockets that have been open. But probably the most important thing we can do for the economy right now is spectrum. These are the airways that your smartphones use. We made a lot of progress on that during the first Trump administration. We fell behind a little bit during Biden. We need to move hundreds of megahertz out in the marketplace. That's actually deflationary. It's going to drive down prices for consumers. It's going to be pro-competitive too.
Those dockets, I mean, what actually accelerated that? What was the outcome?
Yeah, so right now we're targeting all of those, and we're seeking comment on it. We've already closed over 100 dockets. We're doing a massive deregulation initiative, and permitting reform is so key. We have these rules on the books that force broadband providers like AT&T to invest billions of dollars in old copper line networks, but we're taking a fresh look at that so they can move that investment over to high-speed IP networks. So it's effectively moving billions of dollars of capital into new networks. These are some of the economic agendas that we're running at the agency.
So what's the timeline on all of this? It's a lot to get through, but what is the timeline that you guys are looking at?
It is. Our direction is to move on Trump speed, so we're moving very quickly. The first 100 days already, we've taken action across many of these fronts. Also, national security. We've set up a new council on national security at the FCC. We're making sure that we're not vulnerable to threats that come from communist China, for instance. We're looking at making sure that people can make and manufacture things here in the U.S. as well. And so we're running a full economic agenda, and we're pretty proud of it.
What are you hearing from members of the telecom community about what they can do in terms of manufacturing here in the United States?
Yeah, there's a lot we can do. For instance, no piece of electronics can be used in the U.S. unless it's tested in a lab. But so far, 75% of those testings take place inside China. So we're looking at steps we can do to reshore a lot of that testing as well, and that'll help give U.S. manufacturers a boost.
How long would it take to do that?
I think it can be pretty short order. We already have some of that testing here already, so we're taking steps to sort of further do it. But these are just, parts of the pieces we're running at the FCC. It's a really important agenda. Again, we've got to unleash America's private sector. They were held back too long by different red tapes and regulations. Permitting reform, again, as I mentioned, a lot of state and local regulations still slow down internet builds. There's a role for the FCC to step in there and help clear the way. But spectrum, permitting reform, deregulation, that's the driving agenda at the FCC. I think it's going to be great for the economy.
How unified is this approach from the administration? We had the director of the White House Office of Science and Technology on a little bit earlier. He obviously talked a lot about reclaiming the U.S.'s lead in technology relative to the rest of the world, particularly when it comes to AI. Is the FCC a part of that?
Yeah, for sure. Look, President Trump has put together just an all-star team, particularly this second administration. Everybody is fully aligned. They're executing the president's agenda. You mentioned AI. I mean, that's going to be the use case that's going to drive so many of these telecom networks. That's why we have to get more spectrum out there. That's why we have to make it easier to invest in these new high-speed networks. When you look at the data demands of AI, data generally is going up, but AI is going to increase through the roof.
Where do we stand, though, on spectrum? Because I've heard that before. Mm-hmm. What's out there, and even some of the spectrum that has been released over the last few years, there have been some concerns that they might be causing interference, particularly with some of the recent incidents that we had in aviation here. Can that sort of coexist altogether?
Yeah, look, thankfully President Trump has a playbook on this. In 2017, we had fallen far behind China. He stepped up and said, look, I want to lead in 5G. I want to lead in 6G. We cleared hundreds of megahertz of spectrum. We fell behind China. The reality is we are falling behind China right now. But we have the playbook. President Trump is going to step in. We're working right now. Chairman Ted Cruz in the Senate is working hard to get spectrum across the finish line. We can put it in reconciliation. And that's going to help pay for a lot of the efforts that people want to do in there. It's going to be $80 billion or more to be raised if we start auctioning this spectrum off.
Chair Carr, what does this do for people who really don't have access when it comes to telecommunications, our rural areas? We've heard so much of this post-pandemic. Everyone has talked about helping these areas for a long time. How do you actually help those Americans?
Yeah, there's a couple things we're doing there. When we get more spectrum out, that will bring people across the digital divide. It'll give people more competitive options. But also, think about this new generation of low Earth orbit satellites, whether it's Starlink, Kuiper just started launching. There's other providers out there. When we bring that together as part of the solution, that's really the long-term key to bridging the digital divide in a cost-effective way.
Well, that's interesting that you bring up Elon Musk, Starlink, Doge. We know his certainly close relationship with the president. I mean, how much of the work you are doing is kind of focusing on his kind of technology?
Well, look, I think the space economy in general is probably one of our top 3 issues that we're doing at the FCC. We need to start moving much more quickly. It took, years to get the permits necessary for a lot of the communications for these satellites. We need to be doing that in a matter of days and weeks. But it's not just Starlink that benefits.
How do you do it safely, though? There is some concern about how many satellites are up in space at this point. We just did a big deep dive here at Bloomberg about concerns about satellites coming down. I mean, there is a process here. How do you do this safely?
Yeah, we feel comfortable. There's orbital debris mitigation rules that are in place. We license all the satellites at the end of the day. We feel very comfortable that we can still get thousands of more satellites out there. And again, the new trend is direct to people's cell phone. And that's something that's just emerging. In fact, we've given providers authority to go higher power from these LEO satellite systems to get even better direct-to-cell capabilities. So this is a really exciting area.
I want you to talk, though, particularly when it comes to the satellites in space. There's obviously a lot of competition between nations for that real estate, if you will, in the air. The U.S. obviously had the first mover advantage. China has been launching like crazy. India now trying to get into the mix, and we're seeing other countries, including in Latin America, also try to find space up there. Does this become a conflict at some point?
Look, I think this is going to be a very important geopolitical issue. As you know, China is trying to launch their own version of whether it's Starlink or Kuiper. And when they're able to pair Belt and Road with high-speed internet provided from satellites with their own CCP content moderation filters, that's a real threat going forward. And that's why it's so imperative that the FCC move quickly to allow U.S. providers, again, a full range of them, to launch, to compete, to provide coverage. And so that's what we're going to do with the agency.
I have to ask you just about mergers and acquisitions, consolidation in the industry, and not necessarily just consolidation, but the idea of strategic partnerships and other things that in the past, not only under the Biden administration, but even under previous administrations on the Republican side, have maybe found, I won't say a roadblock, but maybe let's say a road bump, a speed bump, if you will, in getting those things done. What type of assurances can you give the industry that if they do find a need and a desire for those types of strategic partnerships and acquisitions, that the FCC won't stand in the way?
Yeah, we're certainly open for business. We're talking to lots of providers. We have a number of deals before us right now. One thing that I've said to everybody, though, is if you have invidious forms of DEI discrimination, that's something that I think you need to get the house in order before you come to the FCC for an approval. That's one of the gating criteria that I've been looking at. But we are, open for business. We want investment. President Trump wants companies building in America, investing in America, and we're going to play our part.
Paramount, CBS, that deal, what can we expect?
We're running our normal course process on that. Again, we probably have 3 or 4 big multi-billion-dollar deals at the FCC right now. We're working through all of them. We cleared one smaller telecom deal earlier this year. It usually takes about 180 days to get through these deals. We're about 100 days into the Trump administration.
What's really the sticking point, though, at this point?
At this point, we're just running our normal course process, whether it's the CBS deal, we have a Verizon Frontier transaction before us, we have a T-Mobile US Cellular. We're just getting our teams crunching on all the deals right now, and it's just normal course.
All right, so no timeline?
Yeah, no timeline to announce here, unfortunately.
All right, listen, we appreciate, we know you're a busy man. Thank you so much.
Thanks.
Really appreciate it. FCC Chair Brendan Carr joining us here at Milken.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.